Hi there, this is the routine weekly traffic light update for the week ended on March 3rd, 2017. Prior to going into the detail of the presentation, here are the disclaimer. Traffic light and capital appreciation point are the results of proprietary risk analysis models and should be used as a part of your due diligence process. Crystal Clear Indicator is not a licensed financial advisor. Investing involves risks. Here's our typical agenda. We will review the long-term indicator, traffic light S&P 500, intermediate indicator, traffic light Dow Jones and NASDAQ. We'll be looking for bearish and bullish signs. Here is the traffic light S&P 500. It is a long-term indicator. Here's the overview as March 3, 2017. This is the second time in history that traffic light S&P 500 reached the bottom. The last time it reached the bottom was about 1995, prior to a long-term bullish run. Let's go over the legends. On the x-axis, the oldest period is on the left. The latest period is on the right-hand side. Y-axis here represents the daily close of S&P 500. The blue line you see here on the graph is the daily close of S&P 500. The green line is the traffic light S&P 500. The horizontal red line and purple line applies only to traffic light S&P 500, the green line. The red line is a long-term conservative line. When the green line crosses above the red line successfully, it is better to take a long-term conservative position. The purple line is a long-term position indicator. When the green line crosses above the purple line and crosses below the purple line again, above and down, it is less risky to take a large bullish position. Traffic light S&P 500 is showing less long-term risk because the line has been descending to the green zone and all the way to the bottom. Monitoring still required. In the 2000, the breach of a red line took several tries. The intermediate signal, which I will discuss later, traffic light Dow and NASDAQ, should help review whether the crossing of the red line is genuine. Let's look at the traffic light Dow, an intermediate indicator. The indicator has a good history showing the intermediate bullish and bearish signals, especially when the red line and green line cross over and showing divergence. Let's go over the legend. The blue line is the daily close of Dow Jones. The red dashed line represents the money entering Dow. The green line represents the money exiting Dow. The orange solid and dashed line are the support point to the red line and the green line. The bright red line you show here and the purple reflect the traffic light S&P 500 in 2008. The bright red line represents when the traffic light S&P 500 crosses above the red line, and the purple line represents the traffic light S&P 500 crosses below the purple line. Before the traffic light S&P 500 crosses the purple line or red line, you can see that the green line crosses above the red line. That's a bearish crossover. It showed twice before the official crossover of the red line, and after that it crossing, the green line constantly stay above the red line. And when the long-term indicator S&P 500 crosses below the purple line, then traffic light Dow Jones follow a bullish crossover when the red line crosses above the green line. Let's talk about divergence a little bit. In 2011 period, as the index continue goes up, the red line continue goes down, that's a bearish divergence, because it finally, when the green line crosses above the red line, confirm the bearish sign, then there's a major, I'll say, correction lasted 6 months. It happened recently as well, in 2015 corrections. The red line continued to descend while the index goes up, and finally the green line shut up, there's a bearish crossover, then correction happened for 6 months. Here is a zoom-in view of traffic light Dow Jones. As you can see, there's a bearish sign there could be a bearish divergence forming, but the green line stayed low. So this potential bearish divergence is not materialistic yet. The bullish signs are the red line start to descend but bounce back and form a higher high. That's a good sign. And the green line continue to stay low. And light yellow box here represents a typical resistance point. So whenever the red line reach here, this point, typically there could be a pullback. We can see the similar things in traffic light NASDAQ. As you can see, traffic light NASDAQ red line made a new high in December 2016. The red line was at an all-time high recorded in the last 11 years. In April 2010, the index retrieved from this type of situation with a significant pullback. In May 2013, this period, 2010 was here. In May 2013, there was a smaller pullback. I will zoom in the mentioned period in the next slide. In both situations, the index started its descent when the red line started to flat out. The bullish trend starts after cap on S&P 500 occur, or the red line start to ascend. So after it descends right here, as shown in the yellow box, the bullish start run restarted when the red line start to ascend. And in some cases, in 2010, the bullish run trend start after cap on S&P 500 occur. In 2010, there was 1 day 2, 1 day 18, 1 day 4. If you desire to know more about S&P 500 cap, you have the privilege to access Starter A service for free during the trial period. Here are some bullish and bearish observations on traffic light NASDAQ. On the bullish side, the red line made a new high, while the index also made a new high at the same time. Also, the red line is forming a higher high. That means accumulation of money in the NASDAQ. Second, it seems that red line finding support and start to ascend again. On the bearish side, the red line start to bounce off the support. On the bearish side, the green line start to bounce off the support, the orange dashed line. It's not ascending yet, but just stays bounce off in that area. Summary for March 3rd, 2017. Traffic light S&P 500 is in green and shows more long-term bullish sign. Traffic light Dow and NASDAQ show some intermediate bullish signs. Traffic light Dow and NASDAQ show mixed signals and could indicate a consolidation. Traffic light NASDAQ money in is near at a resistance level. Short-term gain could be limited. If you have any questions, please do email me. Thank you for listening.